Okay, welcome back. This will be episode 3 of my series on basic things that you need to know when you are a beginner in crypto and blockchain. Okay, again, this is for beginners. So if you are not a beginner, this will be boring for you. These are the things that when I started, it took me some time to know about. So I want you to start few steps ahead. So today we are going to talk about the stable coins. So what are the stable coins? Um, Stable coins, they are cryptocurrencies, and they are meant to eliminate volatility of traditional cryptocurrencies like Bitcoin. You know, Bitcoin is volatile; the price can go up and down, 5%, 10% in a day. Okay, so how do these stable coins work? So a stable coin, um, they are normally pegged with fiat currencies. So normally they will be pegged with the US dollar. So one stable coin will equal to $1. Um, some are pegged with other currencies like euros, like yuan, like yen, um, and then some um, stable coins are pegged with cryptocurrencies. We'll talk about those. Um, and then some are even pegged against precious metals. Some are even the combination. But um, the most used one is the ones that are pegged um, with fiat currencies, mostly USD. So, how does um, this work? How do they maintain? Let's only look at a cryptocurrency. I mean, a stable coin that is pegged with fiat currency. It means one stable coin will equal to $1. So how does it maintain that $1? So they use a burning and minting mechanism. So what happens is if there is high demand of that stable coin and the price starting to move away from $1 going to $1 1 cent, $1 2 cent, they will print more coins to maintain the equilibrium. Same happens if the price starts going down to 99 cents, they will ban some of the um, stable coins because people are selling that stable coins maybe into Bitcoin or into other cryptocurrencies. So they will reduce the number of stable coins, and then it will remain around $1. So that's how it works because they are collateralized. So every um, one stable coin, there must be $1 sitting somewhere in the bank or whichever institution that holds cash. So, why do we need this stable coin? Okay, so like I said, stable coin basically it protects you from the volatility of cryptocurrency. So basically, if you want to protect yourself from volatility, you ramp into a stable coins. Say you have bought Bitcoin and the price has gone up, and you know you will need some cash in the near future. Then you can sell your Bitcoins and go into a stable coin. Even if the price of Bitcoin goes down, you have already locked the dollar or the rand value of your Bitcoin. But also, you sitting at the risk of missing the opportunity if the price of Bitcoin goes up because you have already locked your value in the fiat um, currency like USD or Rand. Okay, not everybody like these stable coins. Some don't agree that they are important, but I think crypto is still in its infancy, and until that time when we will be using satoshis as a unit of exchange, I think stable coins are really important. for onboarding and offboarding into and out of cryptocurrencies. Okay, so let's look at some of the stable coins. The biggest one is Tether. It's sitting around $4 billion down in market capitalization. Let's just look. Let's just look some information on Tether. Like I said, it's one of the most well-known. Started in 2015. Okay, and it's backed by a US dollar. And it's running on. It used to run on Omni, which is a side chain on Bitcoin, but now it's almost running on all the major blockchain platform, in Ethereum, in Tron, and also in EOS, I think. So it's not regulated. So I think Tether has always been in news, although it's the biggest stable coin, but some are not really sure if it's fully collateralized, meaning that for every one Tether, there is $1 in the bank. Okay, let's look at another one. Okay, USD coin. This belongs to Sekel and Coinbase, I think. Yeah, it was launched by Center Consortium, which was co-founded by Coinbase and Sekel. Yes. It's also USD backed. I think this one is regulated in the USA. Okay, we've got TrueUSD. Started in 2018, just like USDC. Let me just check here. USD coin, about $400 million. It's running on Ethereum. TrueUSD, about $191 million market capitalization. You can see the price there, 100,476, 100,446. So the price will maintain around $1, although it might go below 0.99 or 1.01, but it will quickly go back to equilibrium, as I've explained. There is Gemini dollar. It's quite low on the market capitalization, but this is a regulated stable coin owned by Gemini. The vehicle was Twins. Let's just look at Gemini here. Yes, there's Gemini. It's backed by US dollar. And the money is held by State Street Bank and Trust Company. This is fully regulated. Okay, there are some like this one, the Euro stable coin. And then we've got a Pax. This also regulated. Paxos is a regulated company in the United States. So yes, there are a couple of stable coins. So which one to use? You need to do your due diligence. Obviously, you need to use maybe the top 5 because there's quite a lot of them. Some I don't even know, but it will be better to use the top ones and know what how are they, whether they are regulated, where is the money stored, and which blockchain are they running on. Okay, and then we spoke about the stablecoin that is backed by cryptocurrency. The one and the most successful one is DAI. This DAI, it's everything happen on chain. So it's collateralized by Ethereum with a smart contract. So instead of having cash in the bank, you will lock the Ethereum equivalent to $1, and then it will change up and down depending on the price of Ethereum. So here, nothing gets out of chain, no money in the bank. So it's all collateralized by cryptocurrencies. I think they're gonna add Bitcoin and other cryptos as time goes on. So it's a quite interesting one. So yeah, that's more or less about stable coins. There's quite a lot of information on the internet that you can find about stable coin. There's another one that collateralized by gold, DGX. So one DGX will equal to I think an ounce of gold. Okay, we've spoken about DAI, which is collateralized against Ethereum by MakerDAO, that look at the governance. So MakerDAO look at the governance, and it's collateralized by Ethereum. It's quite a complicated process, but it has been working quite fine so far. All right, so that's more or less about stable coins. They are quite important. They also help in transferring money across borders. Like today, you can take a loan in a company in the United States, and then um, they can send you money in dollars through stablecoin, and then you can take it to a local exchange like Altcoin Trader that support a stablecoin and exchange it for rands. Simple as that. That process can happen in less than 20 minutes. So it's really important, these stable coins, especially for underdeveloped and developing countries, instead of uh, doing the traditional Western Union way of MoneyGram way of sending money that will take days, and it will also take 8 to 10% of your money. So yes, I think stablecoins are really important, especially now with the crypto economy that is happening of lending and borrowing money through crypto startups. Okay, I think that's more or less about stable coins. If you've got any questions, do not hesitate to hit me on the comments. All right, I'm out.